Hey folks, what a view behind me. I'm at Black Bull Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Black Bull Markets, saving you up to $600 a year. That's right, get either the Essential, Plus or Premium plans absolutely free, and all you need to do is trade from one lot a month at Black Bull Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below. You've probably heard me talking about trading with confidence, and honestly, it's a lot easier when you're not risking your own money. That's why I wanted to mention Blue Guardian. They offer instant funding or a challenge to get you started, and up to $400k in funding, weekly payouts and a 90% profit split, and they've already paid out over 15 million to traders around the world. Plus they're sponsoring Birmingham City FC and Chris Eubank Jr., so you know they're serious about backing performance. Check them out at blueguardian.com or check the link in the description.
What's going on, guys? Hope everybody's having a good trading week. Hope everybody's having a good trading week or had a good trading week last week. If you guys don't know me, I am Brinks Trades, the resident indices, I guess at this point, futures and Forex, just analyst for the Trading Up podcast. Hopefully you guys have been following me on my journey. If you don't, a little bit about me is I've been a day trader for the last decade. Over the past 10 years, I've been able to come into the charts and started in the Forex industry, started with currencies, about a year or two ago, moved to futures, and then at this point, I'm kind of trading a lot of different, bull markets just because there's a lot of opportunity with, prop firms of both spaces. So if you guys, again, have this your first time listening, every week I come on the charts and I do breakdowns from the different markets. Again, we're going to touch on the currencies a little bit. We're going to touch on, the majors. We're going to touch on the indices, and then, just kind of talk a little bit about that again. So shout out to everybody joining in. If this is your first time watching, please join and please drop a comment in there. I see Tony's in here. What's going on? Hugo, what's going on, man? How's my favorite financial aid doing? Hey, I appreciate that, man. I appreciate that. So he actually brought up a good point. So earlier today, I just dropped in our Discord, Talented 10th community, where I talk a little bit about teaching people, basically the idea of being a financial athlete, right? And so I talk about this a lot of times because traders, we tend to think that, you're going to make all of your money in one trade. And if you're not having a lot of these big trades or winning most of your trades, then you're a bad trader, right? And so just real quickly before you go on the charts, just wanted to talk to you a little bit about this. But so I dropped in the chat, in our Discord, Talented 10th, which is the community that I teach in, just some career stats of some major athletes, right? So you got Michael Jordan, you got LeBron James, you got Tom Brady, right? Obviously big people that were, are, kings or, legends in their sports. But if you notice, right, their percentage was under 50%, right? So Michael Jordan actually missed more shots than he took. LeBron is just over. He's just barely made a little bit more than half of his shots, right? And Tom Brady, he was in the 60s for his pass completion percentage, right? So how many times the pass actually got to the person that he tried to throw it to. But what I'm trying to say here is that if you're a trader, it only really takes 50% of of your wins, right? It takes 50% of your wins to be a successful trader. If most trading percentages, if you can be in that 50 to 60%, you're a pro, right? And anything above that, obviously, you're probably a legend, right? And so I think a lot of times we tend to think that we are not doing well because we're losing trades, right? And you're going to lose a lot of trades. I lose a lot of trades, right? But I always try to keep my losses, as small as possible. Sometimes, obviously your emotions get the best of you, but for the most part, you want to keep your losses as small as possible and try to maximize those wins, right? Because over time, if your strategy is actually viable, what's inevitably going to happen is that you are going to see that win, that account grow over time, right? And so I think that's important to keep in mind. So again, just wanted to keep you guys up to date on what I'm doing with the challenges. I actually was able to pass FTMO's challenge. Again, I told you guys over the past couple weeks that I was uh, gonna really try and maximize FTMO's challenge, just because with them being the biggest prop firm in the space, I want to make sure that I'm back with them now that they're allowing traders in America. So I was able to pass the first challenge with them. And then again, obviously, you guys know there's a verification with that. So keep you guys updated. Was able to knock that out. So again, and the secondary challenge that I have with them as well. So I've taken 200Ks at once. Again, I'm trying to get to the funding as fast as possible. And so you guys can see here that I am currently trading at about 103,000. So I'm up about 3.1% on this account. We did have a nasty, not really a nasty, but a loss um, that netted me about a 3% or just under a 3% loss. It was like 2.5 or 2.6 or something like that. So it was down about, about a little over 2K in the account, and was able to turn things around so far. So ideally, this is, they're going to be the challenge that I'm going to focus on trying to knocking out before the end of September. And then, obviously going to the verification with that. The goal is to get fully funded with FTMO, 400K, and really try to build up, at least 1 million in prop firms. There's a lot of good futures prop firms. There's a lot of good Forex prop firms. I've already funded a lot in the future side of things, but I truly, truly, truly do love the Forex and the CFD side of things, the currency side of things. This is where I started at. And so now that these prop firms are coming back, and I see a few of them back in America. Blue Guardian's another one that's really good. And so Blue Guardian, these are firms that are going to be around probably for a while as the space starts to get consolidated and regulated. So I'm really excited about what's going on in that space, and I'm really excited at the opportunity of growing this, growing my Forex or currency props again. And so the goal is to get funded with 800,000. I'm sorry, back to 1 million in funding, 1.2 million across 3 or 4 or 5 different firms, then just kind of grow it from there. So every quarter, I'm trying to grow my account by at least 400K in funding. So that's the goal. So keep you guys locked in with that as I traditionally, or as I kind of make my way through that. And so that is going to be something that I'm really excited about trying to track down. Again, these prop firms, you have the opportunity to change your life, right? And these prop firms are not just going to be. I think they're going to be around for a long time, right? The future side, the Forex side. I think the future of prop firms is actually making hedge funds, turning these prop firms into hedge funds. You see what FTMO did. They bought a broker in Orlando to legitimize themselves. They also bought a hedge fund, and they're allowing their traders to move from hedge funds or these evaluations to funded accounts. And then, if they persist long enough, the opportunity to really trade and grow with these hedge funds and actually make them part of the fund. So I think that's the future of prop firms. And I'm really excited because it legitimizes the space, and it kind of treats all of these spaces like active evaluations. And so for me, my dream is to trade for a prop firm, right? That was like my dream is to trade for one or find one, fund one of my own, right? And so being able to kind of have these evaluations where they're moving you obviously from paper to funded to, if you trade long enough, actually moving into a real hedge fund setup where you're actively trading and managing capital. These are really cool. These are really cool opportunities. And again, I think this is what the future of the space looks like, right? It's going to legitimize a lot of things. It's going to take a lot of people off the street. You don't have to go to Wall Street. You don't have to go fight, get a finance degree and do all these crazy things that it would have took back in the day just to be a trader. They're really just rewarding people who can execute and have a solid strategy. So I'm excited about the space, and I'll keep you guys locked in with my journey back through this. And so probably just have weekly updates. So let's go ahead and go to the charts. So let me go ahead and share my screen. Move. Oops. Wrong button. Sorry, guys. Hold on one second. Go. Again, this is always done in real time. If this is your first time watching, these are not edited videos. It's just me live actually doing this, right? And so Um, I don't look at the charts between the market closing and where we're currently sitting at. So between Friday and now, this is usually my first time looking at the charts. So let's go ahead and look at dollar. Again, you guys know I say this every week, dollar is king, right? So if you're looking at dollar and you can get a better understanding of where dollar is going, then you can start to figure out, where the other markets are going. So coming into last week, there was a couple things that I wanted to see. I wanted to see a bearish dollar, right? Just because everything that's going on, right, in the markets. And obviously there was a Fed cut rate last week. So the Fed, good old Jerome Powell, Jerome Rome, cut the Fed rates by, I think it was like 0.25% or basis points. So what that means is that the market should have continued to, look for a bearish dollar, but we actually rallied and went higher afterwards. So it's kind of an interesting thing. So a lot of times I talk about my students, the news affects the trend, and obviously we have there's two kind of trains of thoughts, right? So the main train of thought is that there is this economic, your basic economics, right? So if there's a rate cut, it means that the dollar is easier to get, easier to loan out. That means it's less valuable. That means in theory the market should drop long term. In the short term, it can actually be used to boost the dollar. So inevitably what we saw here is we saw the market really run down after FOMC, take out pretty much our targets. So our targets were hit, right, across all of our assets here. And what I wanted to see is a continuation of that bearish dollar. But the markets ran down here, grabbed our sell side liquidity, and then immediately turned around and went up. If we look at this from the weekly time frame perspective, again, we did hit our targets, so this was a good week. It just it might speak to more of a reversal in the market. So we came down here, wicked, and then closed right above this overall volume imbalance that we've been trading. Right, these levels aren't random, right? Us respecting this level like this is not random at all. Nothing in the charts, nothing that deals with money is random, right? And so again, a lot of times traders try to think that the market it's buying pressure, it's selling pressure. That's not true, man. Everything here is nothing is random. If everybody's throwing their markets, their money into the markets, their 401ks, their investments, this is where all of the money works, right? So in a capitalistic society, right, we know that this is king, and there's no way that any of this stuff is random. So we closed down here. We wicked all the way down to these lows, came up, took this high out, or traded above the high of this gap. And so what are we looking at here? Well, we have some trendline liquidity here, right, that we could run in the short term. In the long term, I'm not entirely too sure that this market is going to continue to go higher. I still want to stick to a bearish bias because, again, if we look at these higher time frames, this monthly time frame, I mean, we did wick off of this, but I mean, we're still very much bearish, right? So, and overall, really looking for the market to get down here to 89.65. That's kind of like the monthly level that I think is going to happen. This huge break in market structure, right? I think that's what's going to play out over the next few days, or next few months. But in the short term, I mean, the market can really do anything in between. And so when we're looking at like this midterm level, like these dailies and weekly time frames, we got to see what just happened here. Well, we ran liquidity here. Again, my students, you're gonna recognize our setup, right? We took out liquidity here. We could be breaking structure, but I think this area is very interesting because of the trend line liquidity buildup. So I'm gonna be looking at this area. I'm not really gonna buy. I'm not looking to buy anything, but I'm going to be looking at that zone as a potential opportunity the market could run to. I'm not really too sure as far as what I want to see in the short term because we did sweep this low, but I do think this is a good area. And so if there are bullish setups in this range, that I will be looking for the market to hit this and take this. Long term, I don't know if we'll come all the way up here or keep running. But if we do see a break in daily structure, I will be looking for that, right? And so again, this is going to be probably, again, when you take levels, and I talk to my students about this all the time, but when you take levels in the charts, whether it be buy side levels or sell side levels, you have to take a step back, right? And you have to kind of say, okay, we hit our targets. What does the market want to do next? Do we want to keep running lower? Is it giving us bearish opportunities? Did we break structure? Are we looking for highs? We jumped to the 4-hour time frame. We did tend to break structure here, right? So even though the daily isn't broken, the 4 hours isn't broken. So we gotta have to keep all that in mind as we're making our, our guesses or our predictions for next week. Um, as of right now, I do want to stay with an overall bearish bias, but again, we could run back up here and then go lower. So something like this, right? We could take these highs here. This high here is a very prominent high of buy side. So I don't want to project that this is going to be a long-term reversal just yet. I still have to stick with a bearish bias until we get a daily or weekly break. But if we get that and it's clean, then I'm going to probably start to switch my bias. But as of right now, have to stick with the bearish bias. Love to see this area here or this high taken out. So we'll see. So with that bearish bias, again, it's kind of the same thing here, right? On dollar, or I'm sorry, on euro. I'm going to go to the comment section really quickly. Oh, shit. Sorry, y'all. I'm sharing the wrong screen. Why is this not showing? No, I'm sharing the right screen. Why is this not sharing? Let me try that. Can y'all see? Can you drop a 1 in the chat if you guys can see? Drop a 1 in the chat if you guys can see my screen. All right, cool. So let me do this again. So forget I said anything. Again, it's a live call. I do this probably at least once a week or once a month. So apologies. Maybe more than that. Hugo's gonna be like, nah, bro, you do this all the time. Let's see. So daily time frame. Let's look at this. Go back to this again. So basically, all I was saying here is that we had a huge rate cut last week with the Fed. So in the short term, rate cuts are good because they could be used to boost currency, right? In the long term, if you continually cut rates, then they can lead to a weakness in the currency, and that can cause, obviously other assets to go higher. So we saw the market really use this as an opportunity to really grab liquidity. Again, news is going to really follow the market and liquidity, right? So the price and the levels and the liquidity and where they're resting is still the most important thing. Again, we can see the news be used to run levels, and that's basically what happened here. So if we zoom in, you can see that the market, you can see here that on dollar, the market really came down and took this low and then continued to run higher, right? So this was Wednesday's FOMC, took our low and then it's trading back up. Now we have a couple of kind of like things we can see play out here. If I go to the weekly, the one thing that I want to call out here is that there is this trend line liquidity that's kind of building here. And so we could attack that. But again, long term, I'm not sure if I'm bullish on this, right? And so the reason for this is I'm not sure if I'm bullish because we haven't really had a clean break in structure, not on the daily, not on the weekly. And we're still in an overall market. Long term, everything that's playing out hasn't changed. You guys can see this higher time frame break in market structure on the monthly. So there's not really a whole lot of reasons as to why this market should keep going up. And this could just be a pullback before we continue to go lower, right? So what am I looking for? I actually do want to see the market come up here and take this trend line liquidity. I'm going to get rid of this fair value gap. But it's a little bit clearer on this version of dollar. You can see the trend line liquidity building right there at that 98.14 level. So ideally, that's what I'm going to be watching. Yeah, that's what I'm going to be watching. See if we can really take this high or come back into this range to grab this buy side here and then continue to go lower. There is this fair value gap here. I didn't even really notice this until just now, but there's this overall fair value gap that we did initially trade into, right? But we didn't really fully mitigate, right? We just kind of poked into it. So we could see the market do something like that. The other level that I'll be watching is this high right here. But either way, um, if we obliterate and we just kind of take out these highs, right, and keep running, then I'm really going to change my bias. But this is kind of like my last level of kind of like buy side liquidity here, as far as like a safe idea for going short, right? So I really want to see the market trade back up into this level here, potentially this level, maybe wick off of it and then reverse and then keep going lower. Really sell the idea that we're going to keep going long and then grab and continue to go down. If we close above this convincingly, then I'm gonna probably look to switch my bias. But as of right now, gotta stick with that. Jump into euro, same thing here. It's pretty much the same thing, just opposite. We did take out our all-time high. We did close above it, then trade back into this range. Euro USD actually looks a little bit cleaner as far as like the setup. There's not as many gaps here. You can see that the market traded back, took this high, closed above it, wicked high above it, and traded above and traded back into the range. It's not a break-in structure, right? So there's not really a clean, again, same thing with dollar, not a clean break-in structure here. So I can't really call a reversal yet. So I have to kind of stick with this overall bias. So would like to see buy side taken. And I don't think this is this is definitely not an all-time high here. Yeah, it's definitely not an all-time high here taken. Looking at this weekly time frame, these are all the things that I'm considering, as I'm kind of making a decision on what I want to look like, what I want the market to trade to, and where the direction I want it to go. I don't like this huge wick. So we were able to take the high of pretty much the year. Is this the high of the year? Yeah, pretty much the high of the year, the high of the definitely the high of the quarter, right? And we closed back below it. I don't like to see stuff like that because it means that we could be leading to a reversal. We just don't have a daily break-in structure. So we'll be watching this to see how this plays out. I would say, like, if we get a daily break, again, same thing as dollar. If we get a daily break structure, I would say probably taking out this level here. Get rid of that. Then we could see the market want to continue to go lower. In theory, this fair value gap actually middle line. There you go. I was going to say that line pretty much lines up with consequent encroachment. Again, if you guys understand how fair value gaps work, if you don't, you should be in my Discord learning. You should be in the mentorship. If you do, you guys know. But again, there's a reason why we would want this bullish market to stay above this top half of this fair value gap there. So it's kind of ironic that this level lines up with that too. So if we take out this low here, I'm gonna mark this as kind of like my fail-safe level. Then I'm gonna be looking for short opportunities, right? But I'd like the market to maybe retest the high of this gap and go higher. Jump into the 4-hour. Yeah, same thing. Yeah, I'd like to see this stay above this 50% level. So if it closes, that means it'll not only disrespect this fair value gap, but it also will be a breaking market structure. So we'll keep running lower. So again, we'll see what happens this week. I'm honestly not 100% sure. And again, it's okay to not be sure. It's just basically what I said before, right? Like, you're going to be wrong 50% of the time. Just got to manage your risk. So, ideally, again, what I want to see here is this market stay. Best case scenario would be retesting the high end of this fair value gap and then going higher. Worst case scenario, we wick off this consequent encroachment of this gap and then go higher. But anything closing down here is going to lead me to believe that the market wants to go bearish. So we'll see how that goes. I'm not anxious to take a trade on these at least, but ideally want to see what's going on there. Let me go to NZD. So I want to talk about the NZD setup that I wanted to see last week. So ideally, I thought we could potentially get a run up to this buy side liquidity level here. I actually was off on this one. So I ended up swing trading this based on the higher time frame. So ideally, I wanted to see the market run a little higher and then go lower. This looks extremely bearish, and it could line up with, again, overall bearishness that we're seeing on the other assets. So with this weekly closing this strong, I'm not trying to buy this, right? And so if I was trading NZD this week, this would be an opportunity for bearishness. So potentially trading back into this fair value gap like that and then running lower. Something like that. Yep. So something like that is ideally what I'd like to see us trade back into that range. We broke structure. This could be the opening for a longer term bearish trend. Again, I wanted to see this run higher. I thought this was a really good idea based on trend on liquidity. We didn't actually close like that, so it is what it is. But could be setting up for a good potential trend. And honestly, if this runs bearish, this is why I do analysis across all of the charts, because sometimes something plays out better on one chart than it does the other chart. This is very cleanly, very easy to read bearish setup versus what Euro's doing, right? I could still see this as bullishness or bearishness. And these assets, this is why it's good to know correlated assets. It doesn't matter what markets you trade. You should know what markets are correlated with your assets, so that the ones that should run higher or lower based on the asset that you're trading. Which is why I do a dollar analysis every week first. But if you understand that, then you can kind of go through your checklist of assets and see, okay, this is going up when it shouldn't be, or this is going up and this is lining up with another asset that is, right? And so, if I start going through the rest of these correlated assets with Euro, if I pull up GBP and it looks like this, right, then maybe it might influence what I think is going to happen on Euro, right? And I think we're more likely for Euro and dollar to drop. So for Euro to drop and dollar to rise. So it's a good little tidbit. It's something I learned a long time ago. But you should never just be saying I'm a Euro trader, I'm a NASDAQ trader. You should be looking at your overall analysis across all of the correlated assets, right? I'm not just a NASDAQ trader, right? But you should understand exactly what your currency should be doing in relation to the others. And sometimes that gives you a little bit of, divergence, right? Divergence opportunities. But it also lets you know what the overall bias should be. Let me go to the comment section really quickly. I'm excited for this. I just earned my. I'm excited for this trading. I just earned my first funded account. Road to a payout. That's what's up, man. Where did you just drop in the chat where you traded or where you got your funded account from? Did you go futures? Did you go forex or CFD? And then I guess what firm was it? So keep us updated, man. Come back on here next week and let us know how it worked. So let's go to gold. Yeah, gold is something I'm not touching. It's very bullish. Again, I talk about this all the time. Gold is, we're in the middle of uncertainty, right? Gold surges in uncertainty, and gold has had record highs this year. I mean, this year alone, gold is already up. It's 25, 37. Gold is up. Wow. E507. Yeah, it's up like a few 100% already this year. No, it's not. I'm lying. Why am I saying that? It's up a lot this year. I don't know what the exact number is, but to go from 2,500 to 3,700, I mean, that's actually better than the S&P this year. Yeah. This year we started at what, 5,800 and we're at 6,000. Yeah. So honestly, this is actually a better return than your standard investment in the S&P. So it's a good thing to know, like when times are uncertain, gold is always a good asset to invest in. And it hardly ever really goes down either. Historically, and obviously it's not investment advice, right? It's just my analysis. But if you look back over time, you understand why gold rises. There are these little like spurts where gold, goes lower. But for the most part, this is gold was trading, its all-time high was $2,000. And going into last year, it was barely $2,000 in 2024. And now we're at almost 4. So it's pretty much the value of gold has doubled in like the last 2 years. So if you look back over time, that's never really happened before. It's lost value for sure. But I mean, we're talking over like 30 years. Like this is a 20-year chart. And for the most part, around 2000, gold was trading at $300. Now it's at 3000. So it's actually probably better than a lot of assets. But yeah, so that's good to know. But I'm gonna stay away from gold because it's near its all-time high. That's kind of the reason I don't want to trade this. I'm gonna look at some more currencies so we can kind of look at these. So I'm gonna look at AUD, and because I want to get a better understanding of euro and where I think it's gonna go. Yeah, it doesn't look great for bullishness. Yeah, it doesn't really look great. Does not look great for bullishness. I would imagine 4-hour break structure, yeah. I'm not gonna call bearishness on this. I'm not 100% sure. I'd say this is our fail-safe level. If we start trading below here, even though this could technically be a break-in structure, could be considered when we took out that low there. I'm gonna be looking to see again. Obviously, this is just one level of parameters that I put on stuff. If you're in the mentorship group, you know exactly what our setup is gonna be for that continuation play. So if we see that, then maybe I'll take something. But I'm not really liking bullishness on these XXX USD assets. NASDAQ, I mean, this is pretty much trading at all-time highs. I told you guys it's going to continue to make all-time highs. Came down there, swept that low, and then kept running higher. You can't really bet against NASDAQ to go bearish long-term. We might have these like flash crashes or these moments where the market just tanks. But for the most part, this thing is supposed to keep going higher, and we're at all-time highs. So even at the beginning of this year, NASDAQ was trading at 21,000, dipped all the way down to 16,000, and then went higher. So it's crazy. Crazy. So I'm going to stay away from NASDAQ this week. The only thing I can really project is that the market will trade back down, maybe into this overall fair value gap right there, and then take things higher like that. But that's about it. There's not really a lot of opportunity there unless the market wants to correct itself a little bit. We're really looking to go long, and obviously the worst thing you could do with trading is pick a top or bottom on a trend. And so just because things have been going up for forever doesn't mean it can't keep going up. ES is pretty much the same thing. It has a little bit more. There's a huge gap from that low to that high. Market traded into that. So ideally what I want to see is the market stay above 2 levels with a close, a daily close. Right there is consequent encroachment of that wick. And then this low there. I don't think we'll come back down there, but and that's 6,011. So I don't think we'll come back down there, but that's what I'll be looking for. And if we do get something, I want to see that all-time high hit. That's going to be the target. That's what I would be looking for. It's really important not to pick the top or bottom on a trade. I'm actually going jumping around, so I'm gonna look at GBP. Yeah, this is bearish. This is definitely bearish. Okay, so this is gonna change my opinion on Euro for sure, and all the other like XXX USD assets like Euro, AUD, USD. So this is this is bearish. So what I'm looking at here, and this will, yeah, this is bearish. So it's probably gonna change my outlook on Euro. So we had a couple targets for Euro last week, or in GBP last week. First one was this overall target here. If we go back to the beginning of last week, and you guys can watch last week's video, I saw the market really building up liquidity there. So I figured we could come run up and take that. Then that was the first one. The second level obviously was a buy side here. And then we had this kind of middle level with the fair value gap that really hadn't been mitigated, right? And so it got tapped into, but again, kind of like the other one in Euro, hadn't been fully mitigated yet. So with that being said, there was a ton of opportunity for longs here, which is exactly what we got in Euro. This was FOMC, just like every other asset with a crazy long wick on it. So whenever I see rejections like this, it gets me thinking that the market is ready to go the other way. This wick alone is over 100 pips, 29 to 50 actually. It's like, I'm sorry, it's not 100. It's like 75 pips. So 75 pips alone, basically this formed the high that was formed during FOMC, and then it traded back to this. No, that's bearish, man. So it spent the next couple days running away from this, and then really closed with a crazy bearish day here. So what do I want to see? I want to see if the market wants to run back up into this leg. I don't think we're going to go back up there. Oops. I just strong sneaking suspicion that we're not going higher. It's a couple things. I would love to see where Monday forms. The low on Monday is going to form the low end of the secondary fair value gap. I'm going to leave this up as well, only because I do want to see this fully invert. And depending on how we close, if we close significantly under this on Monday, I don't think we're going to even touch this one again. I would be looking somewhere in this range, whether it be this old fair value gap right there, or the secondary one that'll be formed Monday's low, which hasn't fully finished yet. And I would be looking for something like this. Like it would be down here, we trade up in the range, then go lower. So that's kind of what I would be looking for if I was trading pound. I like this setup a lot more than Euro, because Euro is still trading all the way up here. If I do catch a bearish opportunity on Euro, then it's worth taking because it is higher for sure. But this is clearly telling us what the market wants to do. It wants to start running for sell side levels there. I'm going to get rid of a lot of this. It wants us to keep going lower like that. So that's what I'll be looking for is over the next few weeks, months, is I want to see the market really run down here. This is actually pretty clean. This is actually really clean price action on GBP. So I'm really excited about this. This is probably the #1 asset that I'm going to be looking at going into next week. But I'm going to be looking for that level there, and then that level there at 3.1, 1.31433. I think I said that right. Well, this is longer term play, but with this rapid rejection from this level, and pretty much took back. I mean, not only did it take back the last week of price action, but we're almost on the verge of taking back last month of price action. Right? This was the beginning of August, right here. So this looks like a very much like again, if you guys are my students, I'm going to pull up in a blank GBP chart. But this looks very much like power 3. Consolidation, manipulation, distribution. If that's the case, then I mean, we definitely could be heading for some very clean downside objectives. The first one that comes to mind long term is, yeah, definitely that low there, which is that 1.3136 long term. And then obviously I'll be looking at this one. Either way, I mean, we're talking 300 points, 400 points. So it could be one to watch out for sure. So I think that's all I got for you guys. I think I did everything except YM or US30. And US30 is going to be the same, right? It's going to be the same thing as the other ones. Like, we don't really have a good idea. We're trading near all-time highs. So the only thing you can really do is project this to go higher. Once it takes the all-time high, you kind of want to play defensive. Here's a gap that we could run into. So ideally, same thing as last time. The middle line is there. Ideally, we want the market to come back up and stay above that middle 50%. Best case scenario is we run down and start the week off and then take out that high. But I'm not shorting this. This will be stupid. If you're trying to short any of these asset indices right now, it's dumb. It's not a good idea. So hopefully that's all I got for you guys. So stay on for any questions. But yeah, this should be pretty much a lot for you. I love general trading questions if anybody has any of those. But if you are interested in that, let me know. Then the last thing I'm going to show you off to you guys, obviously I talked a little bit about at the beginning of the call, is Talented 10th. That is my trading Discord community. And so I'm going to go to talented10th.trading.com. This is a very bad looking video of me, but is what it is what we got to work with. So basically, Talented 10th is my trading community. In this community, there's really two options here. You can join the free Discord. It's what I recommend everybody do. Again, if you're not in the Discord, join the Discord, please. There's a lot of free value that's given out. I give out a lot of this. A lot of game there. So join that community there. And if you want to get access to the Discord, again, that's the free Discord, free version. It's a general chat where I just do updated analysis based on what we talked about here. Is basically anything could change between now and the market open, or now and the end of Monday, right, when we really start trading. So I kind of use that chat just as updated analysis. If you are one of my students though, and you want to learn exactly how I do this, right, how I trade the markets, you can come to this, you can join the mentorship. It'll take you to WAP, where you can sign up for my actual mentorship group. It could add you to the mentorship Discord, where I break down everything week in and week out. Right, and so you can see here, this is the general chat, all that stuff I talked about earlier. But then the actual mentorship chat, right, is here, where I'm breaking down my actual trades that I took this past week, right, and why I wanted to see shorts. And I ended up taking out about three-ish trades last week. One passed FTMO, the other one gave me, a loss on that swing trade, and the other one was a basically reading of the markets after FOMC. So there's a lot there that I provide, and I break this down pretty much weekly, and so there's the course, which basically is like 20 or 30 videos, and gets added, more videos added regularly about basically my trading style and how I look at this, and how I call things out, and how am I able to project the market week in and week out. And basically just, I want you guys to see the markets like I do. So that's what that's for. And then the Discord call, which I actually have to do in about 5 minutes, which is our weekly call where we go over any of the trading issues that people had last week, or just concepts in general, right? So again, my goal as a trader is that I don't want to teach y'all forever, right? I'm not one of these dudes that's trying to run a career Discord mentorship. One day I'm gonna wake up and I don't want to be trading anymore. Well, I probably will always trade, but I don't want to be teaching anymore, right? And I've said this all the time that my goal is not to make people that are dependent on me. My goal is to make traders who can do this on their own and they can take their time and pass challenges and evaluations and things like that. So that's what this community is for. If you're interested, again, I dropped the link in there a second ago, talented10trading.com. Check that out. I think there was a question. Shout out to Tony. So Tony asked, I'm sorry, Tony, not Tony, Hugo asked, sorry. How long did it take you to pass FTMO? So technically haven't fully passed that challenge yet. Remember there's 2 phases. So just want to make that clear, because the internet trolls will be like, I thought you said you didn't pass it. You still got one more. So like I didn't fully pass it, but I'm in phase 1. So phase 1 took about, I think if I pull it up. Cool thing about FTMO is they give you stats that you can't lie about. I started the challenge, it looks like September 5th. So yeah, it looks like September 5th. So it took me about 2 weeks to pass it. Today's the 20th. That's not right. Let me look it up. That's a good question. It's a really good question. So I started this challenge September 2nd. Yep. That's what it looks like. Yep, September 2nd is when I started. So it took from September 2nd, then I passed it on September 17th. So it's like 14 days, 13 days, 15 days. So it's like little over 2 weeks to pass. So that's actually really good. So 2 weeks to pass phase 1. Again, everybody knows I'm very aggressive when it comes to taking challenges, because I know that once I get to the funded phase, I can manage my risk really well. And so again, it's about getting as much capital as quickly as possible, right? I'm trying to run up $1 million, $2 million in funding very soon, right? And so at least on the CFD side, right? And so these are some of my stats. Again, I was really close to the drawdown limit, and I had to cut my trade. I was very aggressive that first day. Oops. Which is whatever. The max loss I was down was 7%. And then obviously the profit target was this. Again, this is gonna happen. And I think the third part's that like why I'm aggressive to trades is that I know that if I don't pass the challenge, then I can, get another one, right? This is not like my this is not like, the only challenge that I can afford, right? So my goal is just how can I get to the funding phase as quickly as possible. So if this is my first time taking these challenges, or I didn't have access to, more capital to replace these, then, I probably would be a lot, I would probably take, risk about a 0.5% per trade. And when I get funded, my risk or management is about 0.5% per trade. A little under, maybe like $400 on a 100K account. So I'm not really trying to make $100,000 on one account. I'm really trying to make a lot of money across a lot of accounts. So I might have a 3% month, but 3% across, $1 million in funding, right? Is $30,000 across. So maybe like 20 or 30, 10 of these accounts, right? You get a couple thousand, 3% would be $3,000 in each account. You got 10, that's $30,000 a month. Now tell me if you can live off of $30,000 a month, because that sounds like it sounds like pretty good money to me, right? I think when it gets to that $30,000 or $40,000 a month, man, your life it becomes different, right? So you can pretty much do whatever you want to do in life, like outside of just blow everything. But most luxuries that people want to afford, you can pretty much do. You can buy a nice house, you can get a nice little car, a little play toy, right? And or second, and it's in the form of a second car, and then take care of your family and all that stuff like that, right? Take trips, right? So you can pretty much do exactly what you want to do. So, um, but yeah, so that's that's what are my goals I'm working towards. So keep you guys updated with that. And both phases. And again, as soon as I pass this next phase, this verification, I will go ahead and purchase probably a third account, right? And keep going, right? I just want to knock this out as quickly as possible. So cool thing is that about FTMO is that when you pass these accounts and you get your first payout, they actually refund you the fees for that account that you've taken, right? Now, obviously the ones you fail, you don't get back, but they will pay you the fee of the initial challenge you took in addition to your payout. So it'll be like $500 plus whatever you make too. So that's another thing too about, if it took me 10 tries or 8 tries to pass 4 accounts, I'm still going to get that 4 accounts back. And then whatever payout I get on the first account would pay for, obviously those lost accounts, if there were any, right? So that's why, again, you're thinking about trading as building a business, right? You think about trading as building a skill set. And so don't think of it as just a hustle or you're getting payouts, right? Because the skill set can really take you wherever you want to go, but only if you have structure, only if you have discipline. So that's all I got for you guys. I got to jump into my next call. So hopefully you guys follow me there. And then also follow me at Brinks Trades. That is my social platform. I'm on pretty much everything: YouTube, TikTok, Instagram. I'm at 286 subscribers on YouTube. I just want to get to 300. So if you're watching this, you're not subscribed to my YouTube, just hit the follow. I don't care if you ever watch anything, just hit the follow. So yeah. So all right, guys, have a good one, and I'll see you next week.
Hey folks, what a view behind me. I'm at Blackbull Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Blackbull Markets, saving you up to $600 a year. That's right, get either the Essential, Plus or Premium plans absolutely free, and all you need to do is trade from one lot a month at Blackbull Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below. Hey, if you like futures because of the tight spreads and clear setups, go check out Blue Guardian Futures. They let you start trading futures with up to $450k in funding. The best part, you keep 100% of your first 15k in profits, then 90% after that. No activation fees, weekly payouts, and they're sponsoring Chris Eubank Jr. and Birmingham City FC. Go take a look at blueguardianfutures.com or click the link in the description.